and gentlemen, good day and welcome to Q2 and H1 FY2024 Premier Explosive Limited Earnings Conference Call. As a reminder, all participant lines will be in the listen-only mode, and there will be no opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vishal Mehta. Thank you, and over to you, sir.
Thank you, Lizanne. Good afternoon, everyone. I, on behalf of Stellar Investor Relations, welcome you all to Premier Explosive Limited Q2 and H1 FY24 earnings conference call. We shall be sharing the key operating and financial highlights for the second quarter and half year ended September 30, 2023. We have with us today the senior management team of Premier Explosives Limited, Mr. T.V. Chaudhary, Managing Director, and Mr. Srihari Pakalpatti, Chief Financial Officer. Before we begin, I would like to state that some of the statements made in today's discussion may be forward-looking in nature and may involve risk and uncertainties. Documents relating to the company's financial performance have already been emailed to you. Now I invite Mr. Chaudhary to share his initial remarks on the company's performance for the quarter and half year.
Thank you, Vishal. Good afternoon, everyone, and thank you for joining the call. We'll begin the call with company's operational performance during the quarter and followed by the key industry update. The recent highlight for the company has been strong order inflow. We started the current fiscal year 2024 with an order book of almost 521 crores and added to it new orders of almost rupees 615 crores in the year till date. Our current outstanding order book stands at approximately rupees 105054 crores, that is 1054 crores, a strong growth of 75% year on year and translates into 5.21 times of our financial year 23 revenues. Execution of these orders will help us to bid for bigger and better orders from Indian defense industry as well as from the foreign defense entities. Now, let me take you through the current orders at hand. Ministry of Defense IAF supply of shafts for 292 crores and supply of flares for 260 crores, each to be executed in 12 months. And Ministry of Defense Air Headquarters supply of 50 mm MTV flares, 76.78 crores, to be executed in 12 months. Bharat Dynamics Limited supply of Akash booster crane, 9.73 crores to be executed in 12 months. And Bharat Dynamics supply of P1 and P2 motors for MR SAM for 43.26 crores to be executed in 24 months. In addition to that, we have different orders totaling to 50 crores from Larsen & Toubro Limited, and export commitments of defense products and defense products alone 115 crores. We'd like to reiterate that we have completed the design and development of various products for foreign entities and developed exclusive production lines for these developed products. The company has been constantly receiving production orders in this segment and started supplying to these foreign entities. During the quarter, the company has further executed export orders and shipped out 160 mm rocket motors. Company has done first export shipment of HMX during this quarter. With all these, the company has clocked the record export revenue of rupees 29.4 crores during this quarter. During Q2 financial year 24, Premier Explosives reported excellent performance on an overall level. Our revenue for the quarter increased by 29% year-on-year and 27% in quarter-on-quarter to rupees 78.4 crores. Again, Premier has clocked highest revenue post the COVID-19 pandemic. Premier Explosives has achieved highest ever EBITDA margins of 28% in second quarter of financial year 24. Which is a significant improvement mainly on the back of higher execution or contribution from defense orders, along with the significant contribution from commercial explosives or industrial explosives segment. Consequently, the PAT margin of 15% was also the highest ever. Now, for the future outlook, Premier Explosives is the only qualified Indian company for countermeasures and the only Indian company which is in the export of fully assembled rocket motors. Additional to the rocket motors and warheads, and now Premier has entered into manufacturing of mines and also ammunition. The production of Nippon mines has started, and the deliveries will be from November 2023 onwards. And Premier has successfully completed the development of 40 mm HEAP and HEDP ammunition for UBGL and HPGL under BCPP program of DRDO. So now we hope that we will be entering the production and supplies in the current financial year itself. And HMX and RDX plant, which was earlier producing for self-consumption and also for the domestic market, has now started exporting. We have executed one order of RDX and another order is going to be executed before the end of November. And further orders are being booked for RDX and HMX and their products. Premier has also completed the bulk shock tube production plant, which has come into production, and we are expecting a good contribution from this plant from the current financial year itself. In terms of cash flows, we have generated healthy cash profit of rupees 14.4 crores in Q2 FY24 and rupees 25.3 crores in half year of FY24. With our execution run rate stable and given the nature of our cost structure, the operating leverage of our business will help us to generate better cash flows, which will be utilized towards strengthening of our balance sheet. Coming on the defense industry, the Indian defense sector is experiencing a significant transformation propelled by the pursuit of Atmanirbhar. The Indian defense exports have reached a record high of nearly rupees 16,000 crores in 22-23, saw a 23-fold increase in exports. Now India has independently designed and developed capabilities reaching over 84 countries. The Indian indigenous defense industry has achieved the success in expanding exports with sale of major defense systems, including the BrahMos, supersonic cruise missiles, Akash air defense systems, and artillery guns to friendly nations. As per the industry data, the Indian defense industry is now competing with global firms for exporting their military hardware and have been in competition in multiple countries, including Southeast Asia and Africa. In order to reduce dependence on imports of defense equipment, the government has introduced a number of measures to promote private investments in the sector. As per the industry sources, private sector firms are likely to get defense contracts worth rupees 60,000 crore in the financial year 24-25, which will be around 22% of the overall size of the industry. Private sector defense production is expected to expand at a compound annual growth rate of approximately 20% over the next 3 years, reaching rupees 34,000 crores by financial year 2026. Coming on the aerospace industry, first of all, I would like to congratulate Indian Space Research Organization for the successful landing of Chandrayaan-3 on the south pole of the moon, first ever landing by any country. With this landing, India has now joined the elite club of becoming the fourth nation to touch the lunar surface after the USA, Russia, and China. ISRO has now launched another mission, Aditya L1, for dedicated mission to study the sun's photosphere, chromosphere, and corona. Premier Explosives had a pivotal role in establishing SSLV, that is Small Satellite Launch Vehicle, and Government of India's encouragement to private sector to take up satellite launching on commercial basis. Opportunities are opening in space field, and these are expected to fructify in the coming 3 to 4 years. As per the recent announcement made by Government of India that India aims to grow its space economy from the current $8 billion to $40 billion by 2040, stated Union Science and Technology Minister. Now we'll share key highlights on the mining industry. The mining industry, where the coal is the major mining sector, as per the data available with the Ministry of Coal, Domestic coal production rose by 9.2% year-on-year till July 2023. Further, September 2023 witnessed a rise in India's total coal output of 15.81%, reaching 67.21 million tons, over the 58.034 metric ton produced in the same month of the previous year. Moreover, September 2023 saw a considerable increase in coal shipment, which reached 70.33 metric ton. This represented an impressive improvement over September 2022, 61.1 metric ton, with a growth rate of 15.12%. As per the Coal Ministry, the industry experienced an unparalleled surge as output, dispatch and stock levels have reached amazing heights, and this phenomenal growth is largely attributed to the ongoing commitment of coal PSU. This demonstrates how well the coal supply chain works and ensures a seamless flow of coal across the country. According to the Indian Bureau of Mines, the amount of minerals mined increased by 12.3% in August compared to the same month previous year, while the mining industry as a whole grew by an overall 8.3% from April to August of financial year 24. Thank you. Now I request our CFO to share the financial performance.
Thank you, sir. Good afternoon, everyone. The results presentation for the quarter has been uploaded on the stock exchanges and on the company's website. I believe you all may have gone through the same. Now, I would present the financial results for the second quarter and half year ended 30th September 2023. The revenue from operations for Q2 financial year 2024 stands at 78.4 crores as compared to 60.6 crores in the corresponding previous last year, which saw a growth of 29% year-on-year and 27% quarter-on-quarter. Our operating profit for Q2 FY24 stands at 21.9 crores as compared to 7.2 crores, with a growth of 204% year-on-year. The operating margin for the quarter stands at 28%, clocked highest ever EBITDA margin in the industry of premier explosives, in the history of the premier explosives, which is already shared by Mr. Chaudhary in his initial remarks. In Q2 FY24, we reported a net profit of 11.6 crores compared to 2.5 crores in Q2 FY23, with a growth of 362% as compared to the corresponding period last year. And even on the net profit margin, premier explosives have achieved the highest ever PAT margin in the history of the premier explosives. Let me take you to the H1 FY24 performance. The revenue from operations for H1 FY24 stands at 140.4 crores as compared to 112.4 crores in the corresponding period last year, translating into 25% growth year-on-year. Operating profit H1 FY24 stands at 38.5 crores as compared to 13 crores in the corresponding period last year, which shows a robust growth of 196% year-on-year. The operating margin stood at 27% in H1 FY24. The net profit in H1 FY24 stood at 19.8 crores compared to profit of 3.8 crores in H1 FY23, which showed a tremendous growth of 425% year-on-year. Now coming to the order book. The company's current order book stands at 1,054.38 crores, out of which the higher margin defense segment forms the majority at 884 crores, which is almost equal to 84% of our total order book. Explosive segment stands at 51 crores, and service segments, that is operational maintenance, is at 119 crores. During the quarter, domestic order book 89%. The domestic order book is at 89%, and export order book is at 11% of the total order book. The order book represents a solid and strong growth over the previous years. With this, now open the floor for questions and answers. Thank you very much.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. first question is on the line of Pankaj Gupta from Ratnabali Investments. Please go ahead.
Good morning, sir, and congratulations for the excellent set of numbers you have shown. And sir, thanks for the detailed breakup of the order, individual order which you have given. Sir, I just wanted to understand that in your slide 21, you have mentioned a lot of India's prestigious missiles programs, and some of them are also in the production phase. So I just wanted to understand that in some of them, we are the sole, say, 100% requirements of solid propellants are being met by us. So whether in this order book, any order from these programs have been mentioned, and how does the orders for these programs comes? It's a step-by-step, or it's a quarterly requirement, or how the orders flows?
I have already mentioned about MRSAM. MRSAM is the missile which has come to productionization and being produced by BDL. And there is another missile, Astra, which is again the order. The BDL is the production agency for the entire missile, and we are already having those orders in hand and expecting bigger orders in future. In addition to this, there are others which are in DRDO labs which are progressing, and I think very soon they will be productionized, and we will be continuing to provide the propellants as sole provider.
Sir, but one thing, I think this LRSAM, MRSAM, Astra, these would be going orders which would be for a number of years. But when we report the order book from this, it is only for a immediate requirement, or it caters to the medium-term requirement also?
We report only the order which is received by us, firm order received by us, and that too as per the statutory. No. Normally we declare the significant amount, large orders. It's not that we declare each and every penny order. We keep on getting the orders on a regular basis, but it depends on the importance and the value of the order and nature of the order. We declare to the stock exchanges, and we follow as per the regulations of the listing agreement.
Okay. And so my second question is regarding, sir, so we are already started supplying, say, rocket motors to our customers based in Israel. So if you could help us understand any impact of the ongoing conflict in Israel which is happening, whether it would help us in accelerating or decelerating the shipments. And I think this rocket motors, etc., should be in huge requirements post this conflict. So if you could help us understand our position in this.
As on date, we have no impact of any conflict. These are all the orders we are executing, and we are continuing to do that. And about future impact, I don't know. This is premature to say anything on that. But today we are whatever orders in hand from them, we are executing them, and they are going smoothly.
Sir, I'm talking from the positive impact on this one, because I think the requirement of this rocket motor should increase. Are we getting some initial feedback from our customers that the requirement of this would be increased or enhanced?
Mr. Pankaj, I don't want to make a speculative statement on this. We are in the business. Yeah, if it helps and others, yes, we may grow. But let us be happy with what we have in our hand. We have good orders in our hand, and then we can execute them and all of them. Okay, if this helps and we get our better orders and all those, we'll be definitely sharing with you.
Okay. Thank you, sir. Thanks a lot. Yeah.
Thank you. The next question is on the line of Dipen Vakil from InCred Equities. Please go ahead.
Thank you for the opportunity, sir, and congratulations on a good quarter. So my question is on the order book, sir. So can you help us with the execution timeline for your order book, and mainly on the order book breakup for services, explosive and defense? Is everything executable in, say, around 12 to 15 months?
Can you please repeat the question? You are not audible much.
Sir, my question is on the order book. So, in our order book, can you help us with the execution timeline of our order book, say for services, explosives, and defense?
I have mentioned in my starting comments the execution time of each important order. Yeah.
So, with regard to the O&M operational maintenance, the order book of balance 119 crores, which spreads over 7 years, next 7 years. Okay. So, with regard to the commercial explosives, I think all total order book has to be executed in next 12 to 15 months. With regard to defense, it varies and it has to be executed between 9 to 18 months.
Okay. So,
24 months also, the average.
Okay. Thank you so much, sir. So, my next question is in the line of, sir, some of our DPSUs as well as clients from Israel so DPSUs are facing some supply chain issues. So, did that create any stress on your receivables or any slowdown in orders from DPSUs?
Which defense PSUs? You are saying about the raw material availability?
Yes.
So as on date, we are not facing any problem.
And the orders from defense PSUs are on track as it used to be, or any slowdown on that?
Yeah, they are on track.
Got it, sir. Thank you so much. I'll get back to the queue.
Yeah.
Thank you. The next question is from the line of Abhishek Poddar from HDFC Mutual Fund. Please go ahead.
Thanks for taking my question, sir. Congratulations on strong order book and good results for the quarter. So could you give us some understanding this large order that you received for shafts and flares? What is the timeline for the requirement by MOD? Should we expect such orders in what period for the replenishment? Some understanding there, and is it like a large order for building up the inventory, or how have they ordered such a large number, sir?
Yeah, this is a large order coming under emergency procurement to build up the inventory and all those. But this has to be executed in 12 months period from the date of receiving order. But this is not the only thing, but future for replenishing the quantities and all those, it will continue. May not be of this large volume in 12 months, but yes, it will continue.
Okay, so sir, this what quantity we are supplying, any sir understanding that how much time it gets consumed by the defense forces?
That we cannot say.
Okay. And sir, is it that this was earlier getting imported and now it's getting substituted by us? Where was they buying?
You're right. Earlier they were being imported. Now it has come in the positive list where imports are banned and then only to procure from India. So under that we are the source for these items.
Understood. And sir, the product pipeline that we are supplying now has increased with mines and ammunitions. Any understanding that next 1 to 2 years, what kind of order inflows are we expecting, or at least some understanding how you are seeing the markets?
Orders are expected. This is the beginning only. These products earlier which are being imported, now even mines or ammunition also, they are all being imported. Now they are all going to be sourced internally, indigenous sources. So definitely there will be increase in the orders and the quantities. Now quantifying it in terms of so many crores is difficult. But yes, we are targeting a 500 crore turnover in the coming 2 months, a 2 years period.
500 crores a year you're targeting, sir?
Yeah.
Understood. And sir, if you look at the margins, for this quarter, 27.9, if you could give us some understanding that how are the defense margins and how are the explosive margins, and should we assume that the current order book has the similar margins for next 2 years?
Giving margins separately, I don't think that we can do that.
Okay.
But yes, the overall margins will remain like that.
Okay. So this 27-28 is where your entire order book is currently based at?
Yeah.
Understood. Okay. Thank you, sir, and all the best.
Thank you. The next question is from the line of Darshal Pandya from Fintrust Capital. Please go ahead.
Hello, hi. The questions are already answered. Thank you so much.
Thank you. The The next question is on the line of Aman Vij from Astute Investment Management. Please go ahead.
Good afternoon, sir. My first question is on the mine production, which you talked about we started recently. If you can talk about how big is this opportunity and what kind of revenue we can achieve in this division over the next 2-3 years, as well as does this also include some kind of underwater mines, or this is only the above the surface mines only?
We are working on multiple types of mines, where some are under development and some have already got into productionization. So, present order what we have received, I think we have informed.
Mines, about 40 crores.
Yeah, that is indicated. So again, it is not possible to predict because these things, okay, now this order next year or may not be requiring so much having placed order. But it is, yeah, either this or that or something will take over when you have a bouquet of multiple products. So that's why I said that we can say that we have targeted 500 crores. But if you ask which product and all those, we cannot express in that way. Yeah.
Sure, sir. I understand that point, but I was trying to understand in terms of, say, import or the opportunity. How big is the opportunity in mines? Whether we get it or not, we can't predict that. But currently, what?
Present 3 crores. In future, we cannot predict that how and all. Because these are all war machinery and used in that. So, whatever is used in the practice and war wastage only will be replenished. So those quantities we'll have to understand.
Okay, sir. My second question is on this grenade ammunition part, the 40 mm, which you talked about a little bit in that starting speech. So last call you had talked about we had submitted 2 phases of our clearance and we were expecting clearance. So any update on that?
Yeah, that's what I told. We are cleared and now we are ready for production. We have built the production facility also. Product is qualified. Vendor user agencies have visited us. So we are hoping that in the current year some RFP will come and then we'll be participating in it.
Okay. And you expected this in Q3 or Q4?
Q4, I think. Q3 probably order may materialize, but we cannot predict all these timings and all those. They don't work in months, rather they are working years.
Sure, sir. And you talked about that some paramilitary forces order might come, but the bigger opportunity is the army orders. So any further update on that? Is army also looking at, are they coming for the inspection?
So army RFPs are, the old RFPs were there, but they are not yet finalized. These are the RFPs from paramilitary forces. What I am talking that we can probably productionize in this year. So those are only visible now, right now.
Okay, sir. Just last part on this. What is the maximum revenue we can do in this, in terms of our production capacity? Do we have the production capacity to make like 100 crores also, or is it a smaller size we can produce in the new production facility you talked about?
Yeah, we have the production capacity and pent-up capacity to do 100 crores of business in this line.
Okay, sir. These are the questions. Thank you.
Thank you. The next question is on the line of Vivek Gautam from GS Investments. Please go ahead.
Yeah, am I audible?
Yes, sir.
Yeah. Sir, seeing this, nowadays the warfare going on in Ukraine and in Israel, since everything is through missiles and aeroplanes, bombs, and so we are placed, I believe, in a sort of a situation for us is better in terms of opportunity size and as such, any new orders we have got from Israel and in any new orders from the missile programs, and that is the one thing question. And secondly, similar sort of opportunity size exists for space SSLV also, I think so. And how is the future looking like?
As far as the defense orders, you named about the present countries which are involved in the conflict. No, whatever orders we have in hand from Israel, we are executing. There are no new orders. And about the space sector, yes, new SSLV is the new thing which the government wants to privatize the satellite launching. And having participated in the production of SSLV at Sriharikota facility, we are very much favored to be the partner for this. So a lot of this expression of interest and other things are going on, in which we are participating along with other players.
And sir, what is so? This is really an Atmanirbhar scheme has really sort of been helping the indigenous defense companies like us. And but the earlier sort of regime was totally favoring the imports. And now for a change we are doing it. But now the elections are coming, and any preparation at our end for a sort of adverse development and in terms of regime change, and how prepared are we for that sort of theoretical situation, sir? And your future looking like that this current policy will continue, or sort of basically any preparation at our level for policy and regime change, sir?
I think the encouragement to make in India and then has started almost 15 or more years back. It is only getting better and improved more and more with the consecutive governments. So I don't think any adverse effect will come based on the political situation. It will only, because today we have already transformed from an importing country to manufacturing country and then exporting country. So I don't think that is going to affect us.
Yeah, that's a really good development. Good for us, good for country. Thanks a lot, sir.
Thank you. The next question is from the line of Nikhil Jain from Galaxy International. Please go ahead.
Yeah, thank you for the opportunity. I just wanted to check whether we have started supplying the new order that we received for countermeasures and flares. So have you already started supplying that?
No, the supplies will start from, I think, February month onward.
But you said that since the time of receiving, we have to supply that order in 1 year, right? So 12 months emergency procurement. So
yeah, 12 months. Each order has to be executed in 12 months.
So we received the order sometime in August. So from there we have to supply till next July, August 2024. Is that a correct understanding?
Right. Yeah.
So if we will start supplying from February, so would we be able to manage the entire order by, let's say, the August of 2024?
Yeah, we are working with those schedules only, because see, any other big order execution, it needs built-up time. You have to procure the raw materials, you have to build the components, you have to build your vendors, meet the large quantity and all those. So that's why 6 months time is needed for those things. Now we have already completed those. Now the process is going on, outside process. Once that process has to shift inside our plant, then we'll be doing. In the meantime, we are also building up the multiple production lines. So we are quite confident that we can meet that.
Okay. And just to follow up on that, sir, so you said that we are targeting 500 crores, let's say by FY25, FY26, 2 years' time. But if we will supply, let's say, a 500 crore order in 6 months from February 24 till August of 24, so the turnover should actually exceed more than 500 crores, given that there are other products also which are there, right?
Yes, you are right. But the part of it will come in this financial year, part of it will go in next financial year.
Right. Yeah. So that is there. Yes. And sir, the second question was related to the grenade and other things. So you said that we have submitted it and we expect the order finalization if to happen by Q4. Is that understanding correct, sir?
Yeah, submitted in the sense it's not a tender submission or anything. It is, yes, we have developed the product. Product has been submitted for the testing by the user and then the quality agencies. And it has met the requirement.
Okay. Fair enough. So best of luck for execution, sir. Thank you.
Thank you. Thank you very much.
Thank you. The next question is on the line of Ankur Kumar from Alpha Capital. Please go ahead.
Yeah. Hello, sir. Thank you for taking my question. So my first question is on the balance sheet side. There is a big jump in other current liabilities, which I believe is advance from customers. So can you comment on?
Yes, sir. We have received some advance in the last week of September 2023 from the MOD against the new order.
So generally, what percentage of our revenue is generally comes in advances for say?
No, normally MOD is not giving any advance, but this is in case of an emergency, they have given some advance to the extent of 15% against the bank guarantees. This is an exceptional case. Not that we get advance in every case.
Got it, sir. And sir, on margins, you said this current 27% type is sustainable, but isn't there an operating leverage in the business? Because I generally believe gross would be working on a similar gross margins, and when revenue improve, our margin should inch up from here.
So normally, if you remember our previous calls, we were talking about 20% on overall average EBITDA for the whole year. But lucky, first 2 quarters, we almost reached about 27%. So we are trying hard to get to maintain the similar margin. There may be some plus or minus, but we are trying to do that.
It changes with the deliveries made and the inspections and all those. Sometimes it may happen that the last day of the quarter we could not deliver and it may go into the next first or second day of the next quarter. So that consistency is a little bit thing, but yes, we expect a good.
Got it. And sir, on the last question, on the flare side, you said you will start from February. So can you comment on how should we assuming the delivery in the second half of the year? How much revenue or delivery schedule should we be expecting in Q3 and Q4 for this year?
No, sir, we cannot comment on the revenue. It is very premature because it depends. Dispatches depends on a lot of PDA inspections and all, which are not in our hand. But the new order execution, as Chaudhary was telling earlier, some portion, maybe a little portion, may start going from the February. So little portion may come in this year, and major portion will come into the next year.
Sure, sir. And sir, in terms of new order wins, how much are we applying, and what is our chances to get more such orders?
You are quite aware of the fact that we are limited persons are there involved in this. Limited companies are involved in this business. So with our present niche position, yeah, we expect that orders will keep on coming.
Sure, sir. Thank you and all that.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is on the line of Jayesh Shah from OHM Portfolio Equi Research. Please go ahead.
Hello. Am I audible?
Yes, sir. Little louder. Please speak a little louder.
Yeah. Sir, congratulations for great set of results. I just wanted to clear the understanding. What is the order inflow in the second quarter? Because I thought the first quarter order inflow was already around 1,000 crores.
Second quarter order inflow was, it was nominal because I think we stood about 50 crores, nominal 50 orders. We have not received any significant order in Q.
Okay. And how is the pipeline looking at it for the next 2 quarters?
Yeah, we are participating in many RFPs and tenders. So how many of them will be completed in this year, come to order placement stage and all those? Prediction is a little difficult because MOD doesn't work on that basis. So yes, we are working and we are participating. All of them may not materialize. Some of them may materialize. So that's why we are targeting this financial year and next financial year. Probably we'll inch and go closer to 500 crores.
Okay, because sir, I think the last call, my understanding was that we were targeting 500 crores for this financial year, depending on the execution cycle that we expected for the emergency order. So that has got delayed a bit, right?
I think if I remember correctly, that was somebody asked about that, can you achieve? We said that yes, the way the orders are in hand, we can achieve. But our target was 300 crores.
I see. Yeah. Okay. And based on the current pipeline, what should be the average order inflow for the year that one could see now as a run rate?
Between last year and this year, I think last year we received about 400 crores and this year we have already received about 700 crores.
Right.
And with the new products of DRDO coming into productionization, we feel that this will continue. Yes.
Okay. Thank you very much and best wishes.
Thank you.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah. Hello.
Mr. Deepak Poddar, please proceed.
Yeah.
Mr. Poddar, we are unable to hear you.
Audible now?
Sir, your voice is breaking up.
Now it's better? Hello?
Sir, slightly better. Please proceed.
Yeah, just a clarification, sir. I mean, you mentioned 300 crores and 500 crores is our execution target for this year and next year, right?
Yeah, 500 crores, like I said, 25, 26 is the target. That is this year is 300 is our target. It depends. If we can execute some of them pulling this year, it may exceed that also.
Okay, and 500 crores you're saying about FY26, not FY25?
Yes.
Okay.
25 itself, I think we can reach.
FY25 itself. Okay, fair enough. Yeah, that's the clarification I was looking at. Okay, that's it from my side. All the very best. Thank you.
Yeah.
Thank you. The next question is from the line of Kaushik Mohan from Ashika Institutional Equities. Please go ahead.
Hi, sir. Congratulations for the great set of numbers. So I'm a bit not convinced on this number because we are seeing from the last 15, 16 quarters, if I look at our employee cost, day by day we had a peak of around 35% of our entire total revenue. But now it comes out to be around 18.5. Can I get some clarity or understanding on this? Like why are we reducing? What is playing out our employee cost is going down? Are we reducing on what basis?
See, earlier, if you go back in the history, we were an industrial explosives manufacturing company, where most of the operations, the detonators, detonating fuse, and all those were manpower intensive. So we had larger manpower, which was permanent employees with larger pay packet because of the long experience and service. You know, it's a 40-years-old company. Now the employees, workmen, and also they have reached that retirement stage. As we are retiring, the numbers are reducing. But we are now shifting more and more towards defense products and all those where the manpower requirements are less. We are not recruiting. We are rather using the people effectively and train their experience and all those rather than recruiting fresh people. Now the recruitment is more towards the educated and the skilled employees rather than the workmen and all those. So that has brought this change.
Okay. Sir, and another question is on, are we able to maintain these margins going further? Like our operating margins is being currently around 28% in this quarter. Can we see the growth and can we maintain this overall next till we reach our 500 crore mark of in a couple of years on the top line?
Actually, I think the margins should be good, but it is not that we can commit on 28%. This is good because it depends on the product mix. It depends on the
quarter to quarter. It varies. Depends upon the delivery of the goods. It's not just.
Then what is our normalized margin, sir?
Like earlier, we have indicated normally we will be maintaining around 18 to 20% EBITDA. That is, yes, definitely commitment. But beyond that, yes, depending on the deliveries and fresh orders coming and how we execute, it may go up also.
Got it. Sir, I have another last one final question. Sir, if we see in the our annual report of March 2023, we have paid taxes of 1.91 crores, but we reported around 4 crores as our tax expense in our P&L. What is this majorly difference is coming? Because I can't find any deferred numbers over here in the balance sheet. So some light over here on this number clarity.
Sorry, you're talking about deferred taxes, right?
Yes.
No, it is related to the calculation which there was some MAT liability was there. There was some calculation.
So VAT liability was there.
MAT. It came in as MAT.
Okay. So that's the reason MAT liability is the major reason. Okay, got it. Sir, and how about our order book, sir? We can see that our order book is break up with defenses of around 84%. So are we also going further when in couple of years down the line or the 4 years, 5 years down the line? Is the defense order being in such a dominant positions in the order book?
Yeah, it should be.
It should be. Okay,
yeah.
Something around 25%. Then can I assume it something around like that?
Yeah, more or less. If you see even last year also, you can see 70-75% depends on the system.
Okay. Got it, sir. Thanks, sir. I'll get back in the queue once again.
Thank you. A reminder to the participants, we request you to restrict your questions to 2 per participant only. We'll move to the next question. That is in the line of Shantanu Chatterjee from Mount Infra Finance Private Limited. Please go ahead.
Congratulations for a great set of numbers, sir. And thanks a lot for this opportunity. My question is actually based on your current book and upcoming opportunity size, what would be the capex required to fulfill these obligations for FY24 as well in FY25?
It will not be a large capex because we have already invested in Katapalli and we have built enough capacity. So what will be needed will be maybe some balancing equipment or the tooling or other things which are needed, which may not be very large, but yeah, somewhere within the, I think, 10 crores per annum or something, it will be like that.
10 crores each for FY24 and FY25, sir?
Yeah, that is in case when we enter
more or less
into the special product.
Maintenance capex.
Yeah.
Okay. And sir, in BrahMos, what is our contribution segment and how big it is for upcoming period?
BrahMos, right now we are in the technology transfer process. We are going to make the propellant rocket motors for them. But this is a project developed by DRDO. So we are under TOT process and commercial production will start probably in the next financial year. And this is available in all newspapers. What is the size and all those about BrahMos.
Okay. Thanks a lot, sir.
Thank you. The next question is from the line of Manan Shah from Moneybee Investment Advisors. Please go ahead.
Yeah, hi. Thank you for the opportunity and congratulations for a good set of numbers. I wanted to understand in terms of the products you manufacture, is there a useful life for these products? I mean, an expiry for these products. So, say if they are not used within that expiry, they need to be replaced.
Yes, you're right. There is a shelf life for these products. So some go for life extension, and some may go for refurbishment, which has not yet started in the country. But they have a shelf life. These all explosives, propellant products or rockets and missiles. They have generally 10 years is the life given. Afterwards, it's a question of extension by conducting some trials.
Okay, understood. And in terms of propellant, so apart from us, we maintain 2 facilities, one for ISRO and one for Advanced Systems Laboratory in terms of propellant. So are there any other manufacturers for solid propellant or we are only 3 of us? And when an order is released, how does the order get bifurcated between these 3 players, I mean, including us for the solid propellant?
I think you are asking about, question is not clear. Can you repeat it?
I'm saying for solid propellant, I believe there are 3 manufacturers, including us, and the 2 facilities that we maintain, one of ISRO and one for ASL. So when an order for solid propellant is released, is it bifurcated between these 3 players, or how is that decided?
See, the ISRO facility at Sriharikota and Trivandrum, and also Jagdalpur facility, they are built for producing the large rocket motor, which normally a private sector company cannot invest such infrastructure. But today, the requirements have gone up, so whichever a private sector company or other company can take over, they are offloading. So in that process, now we are already producing PSOM XL, and then some of the variants of ASL rockets we are doing in our facility. That is decided by them based on our size and plant and then capability and capacity.
So are there other players as well who are looking at this opportunity, or is there a long-drawn approval process which acts as an entry barrier for other private companies to enter this space?
Yeah, correct. This is highly capital intensive, and you know that what is the kind of build-up it requires and the time needed and gestation period. So anybody to reach this level in which we are, it takes a few years for them to come to that level.
Understood. And also in terms of propellant, I believe there are 3 types of propellant, as per my understanding. One is cryogenic, one is liquid, and one is solid. So are we looking to enter the other 2 propellant space as well, or do we possess the expertise or know-how to enter that space? Any light on that?
No, those first 2 what you mentioned, they are limited to only the space application as on date.
Okay.
And, they are done by them, and then there are other players which are, they don't need our expertise in that line. And we are specialized in composite solid propellants, which are the main propellants for all the defense and applications. And in aerospace also, if you see the launch, the main launch is done with solid propellant, composite solid propellant booster rocket motors. When the space launch vehicle takes off, you see the large fire plume coming out. That's all from the solid propellants, and we are in that field.
Okay, understood. Thank you for that. I'll get back in the queue.
Thank you. The next question is from the line of Tirut Gosar from Swan Investments. Please go ahead.
Hi, sir. I missed your guidance for FY25 and 26 on the top line. Will you please repeat?
Yeah, I think we've already answered a number of times on this point. Yeah, please go ahead.
Could you, what are you expecting? What is the top line for FY25?
So the total turnover, like we mentioned, 25-26 will be crossing 500 crores.
Will be crossing 500 crores.
Okay. Top line. That is our target.
So, sir, your order book currently standing on 1100 crores. So, don't you think that you are being a little conservative in your guidance for the top line?
Would you say we are conservative?
Yeah, your order book is currently standing at 1100 crores, right?
Right.
And you have an emergency order that is to be executed by August 24th, if I'm not wrong. So, just taking that order is approximately worth around 700-800 crores.
That is about 540 crores without GST, but at the same time, we are expecting some portion of that to come into this year, financial year 24.
Okay, sir. Also, sir, one more question in regards to your balance sheet. So, your trade receivables have almost doubled.
Right.
So,
yes. So, significant amount has to come from Ministry of Defense, which we are expecting to come in next couple of days.
Okay. And, sir, one more thing. So, if you look at the other current liabilities,
right, sir,
in your balance sheet, so your borrowings have...
A little closer to the mic and louder, sir.
Yes, sir. So your other current liabilities have almost tripled in 6 months. And your... Yes.
No, this is basically majorly, as we explained earlier, this is basically because we have received some advance against the new Minister MOD order.
Okay. Thanks a lot. Thank you.
Thank you. The next question is on the line of Sampath Nayak from Tiger Assets. Please go ahead.
Yeah, thank you.
Sorry to interrupt, Mr. Naik. Sir, your audio is breaking up.
Hello, am I audible?
Yes, sir.
Yeah, so thank you and congratulations on good set of numbers. So I joined the Concall bit late. So didn't we target for 550 crore of revenue in FY24 itself in the previous Concall?
That is too optimistic.
Okay. So we are targeting it by FY25, right?
Yes.
And for FY24, is it fair to assume that we'll be doing 300 crores of revenue?
24 you are talking about?
Yes.
Yeah, it will be, nearby, maybe some plus or minus will be there.
Okay, sir. Okay, sir. Yeah. Thank you. And all the best, sir.
Thank you. The next question is from the line of Manoj Shah from Laxglow Investments. Please go ahead.
Yeah, good afternoon, sir. Just wanted to understand when do you start a new product development? Like, is it that defense forces reach out to you to develop a product, or you feel there is a demand, then you develop it, and then you go them, ask them to rectify the product? So how does it go?
Yeah, it works in both ways. Most of the time, defense, because they are already what they are importing, they may approach us that, okay, this developed indigenous, or it may come through DRDO. So it happens like that. And in some cases, yeah, we use our own R&D and then our own innovation, and then we develop a product and then we offer. So if the armed forces find that useful, then they can buy like that. So it works on both ways.
And how's the time span of a product life cycle normally till start of commercial production, if you could give some idea?
See, I have already mentioned, normally 10 years is the shelf life declared, warranty or shelf life. But if a product is taken and then launched on the platform, like on an aircraft or on a ship or somewhere, then it is counted on number of hours it is on launch, and the shelf life changes with that.
That's you're talking about the shafts and flares. Is that correct?
Pardon?
You're talking about this shelf life is about the shaft and flare.
Not only shafts and flares, missiles also, rockets and missiles.
Okay, so you're saying shelf life is 10 years, but when you onboard it, then it's an hour kind of.
Yes. Even mines also, most of products made for defense, they are 10 years shelf life.
And like you recently got this orders on shafts and flares. So since this would be based on how many squadrons, fighter plane squadrons we are having in India, based on that you got the shafts and flares order. So can you give some sense of what will be the replenishment cycle for this? Or initial order what you got is of how many squadrons, or some idea how much percentage of the total for the fighter planes we have in that sense. Give us some sense of that.
See, it is a bit difficult to tell that. We have different fighter planes with different dispensers mounted on them. So what dispenser is mounted on a flight, it depends on that. So we as outsider of the defense agency, it's difficult for predicting that. Because there are the dispensers, different NATO has different dispensers, and then the Soviet Union, ex-Soviet Union, Russian platforms have got different dispensers. So based on that, this is done. So giving a figure is difficult.
Okay. And like, suppose you start developing a new product from scratch, what's the product development life cycle? Is it like 5-7 years, or it's close to 8 to 10 years?
You mean the development time? Life cycle means?
Yes. Suppose you develop the shafts and flares, earlier it was imported. So what was the product development life cycle before you started commercial production?
Generally 4 to 5 years for it to come to production level. Now it can be a little earlier also, or can take a little longer time, depending on the inspecting. See, for example, if you are developing for Air Force, that is the products which are going to be mounted or installed on the aircrafts, there the qualification is much more stringent, and it will take much longer time for launching if you are developing a product.
Okay. Fine. Thank you. Thank you very much.
Thank you. The next question is on the line of Sanjay Satpathy from Ampersand Capital. Please go ahead.
Hello. Hello, sir.
Yes, sir.
Sir, thanks a lot for giving all the guidance. I just wanted to understand the drivers of margin expansion and how sustainable are they?
So if you go through the previous 2 quarters, I think we have reached almost about 27% EBITDA level.
Right.
So going forward, we have to see, but I think we had the guidance of between 18 to 20% on an average basis. So going forward, it again depends on the product mix, because we do produce so many products, multiple products, not just one product. So the margins also vary product to product. So it also depends on the product mix.
So when you are giving this guidance of some 300 odd crore revenue or 500 odd crore revenue, so all those numbers on top line, but still 18 to 20% is the sustainable margin on those revenue. Is that what you are saying, sir?
Yeah, it's a sustainable margin, but we may get much better margins also.
Understood. In terms of your exposure to this coal sector, is that something which is going to be a big growth driver for you, or it will be defense which will continue to be your major focus area?
See, the coal sector, of course, in volumes it is going big and all those, but the competition also very fierce there. There are many players who are supplying and all those, and the prices, margins are very low comparatively. So our area which we are drive is in defense products, defense and aerospace. At the same time, we won't be leaving the ground. We will be very much there in the industrial explosives also, but we will not go for very low margins and all those. In fact, our exports, if you look at it, half the income from exports has come from industrial explosives.
Understood. Thanks a lot, sir.
Thank you. The next question is on the line of Sarjeet Yadav from Mount Infra Finance Private Limited. Please go ahead.
Good afternoon, sir. Hearty congratulations on the good numbers. I have a couple of questions. Firstly, is regarding the Nippon mine. Is it by Premier or is it through some JV or subsidiary? And second question is, are you planning to participate in the Make 3 projects, 6 of them from Indian Air Force regarding development of the missiles?
Yeah, Nippon mine, there is no JV or anything. It is our product and the Premier Explosives produces it.
Okay, sir. And anything regarding the Make 3 projects, the missiles, any new missile development? There are 6 Make 3 projects which have been announced.
No, right now we are not in any Make 3 projects.
Okay. Can you give an idea what the size of the market size of the Nippon mines? What are you expecting to come from that side?
I think these are the questions are repeating.
The market size of Nippon mines. So no, at this moment we have the order for about 40 crores, And going forward, that may be continued and there may be as per the requirements of the defense.
Okay, sir. Okay. Thank you.
Thank you. Participants are requested to restrict their questions to 2 per participant only. We'll move on to the next question. That is from the line of Prabir from Ratnabali Investments. Please go ahead.
Thank you, sir. So I have questions. One, what is the status of the Coal India order, which is was around 150 crores? And then, can you please throw some light? I think you already spoke about, but I might have missed it. The large programs which could come to the production phase in next 2 years.
Actually, your voice is going up and down. Can you please repeat? Keeping closer to the mic.
Yeah. Am I audible, sir?
Yes.
Yes. I wanted to know what is the status of the Coal India order worth around 150 crores. Will it come in this financial year? And then I have another question, which is if you can throw some light on the programs, large programs, which will come to the production phase in next year.
So you were talking about Coal India order for 150 crores.
What is the order? I might have wrong.
Which order?
Coal India order.
Coal India order for 150 crores. Where did you get that number? We don't have that much order from the Coal India at any point of time.
Okay, so what can be the quantum of that?
At this moment, we have a small order which we are executing it. We don't have that much order at this moment.
Okay, and the large programs that can come.
Sorry to interrupt, Mr. Prabir. Sir, we are unable to hear you clearly. Can you use the handset mode while speaking and not the speakerphone?
Am I audible now?
So slightly. Please proceed.
Large programs which can come to the production phase in next 2 years.
Yeah, we have Astra is one program where we are the part of DRDO. We partnered with DRDO in developing the propellant. So as on date, we are the single vendor. So we are expecting that to become the next big one, along with MR SAM, LR SAM, and QR SAM. These are all the new projects, new products which are going to be productionized.
Okay, sir. Thank you.
Thank you. The next question is from the line of Anand Jain, an individual investor. Please go ahead.
Thanks for the opportunity, sir, and congratulations on a good set of numbers. My first question is that are there any orders where we are L1, and if so, what are the size of those orders?
Which one, please?
Are there currently any orders where we have bid and where we are L1?
There are several bids we have participated, so this is a continuous ongoing process.
No, where we are L1, sir. Where we are L1, where we are the lowest cost, or where the...
Oh, nothing is finalized and it is advertising stage. No such order. What we are executing already, we have informed and already you know about all those.
Okay. Great, sir. The next thing that I have is, sir, there is shafts and flares are, they get used regularly by the Air Force. Do you have? It's not like you use it in wartime. They get used in trials also quite regularly. So my question here is that, do we have any idea on the amount of shafts and flares used annually by the Air Force?
No, we don't have idea, but yes, you are right. They are not used only when war. Not only other ammunitions and others also. They keep on practicing and then they doing it. So every year that quantity will remain other than the emergency requirement.
It would be really helpful if you can find this piece of info, because then that will give us what will be a constant demand and not just one time thing, if that can be found out in some ways.
See, none of these products will have any constant demand, like a consumer industry or a mining sector where mines are being regularly produced and all those. These are all, year to year, they keep on changing. That's why we always go with multiple product bag. It is like a bouquet of multiple things. So it cannot be the same quantity next year, it will continue. Instead of that, we'll be producing another product to take that place. It goes like that rather than going by that.
Okay. So last question from my end is that, we used to do defense since quite some time. We were in propellants, we were in motors. Some of these things had come to, production lately. So my question to you is that, sir, what are the other products that can be as big as shafts and flares in terms of opportunity for us? Like, if you can say that, can grenades be that bigger product? Can mines be that bigger product, or can propellants purely in terms of market size, if you can.
If you say like that, in 1 year's time, I don't think any of these products can give us a 500.
Not in a year's time, sir. Not in a year's time, but over next.
All these will contribute. 30 crores, 40 crores, 50 crores like that. The others will keep on coming from these ammunition, mines, and warheads. All those. It will be like that. But this 500 crores and plus is a one-time opportunity of emergency procurement. We do not know. Maybe in future we may again get such opportunities for other products also.
Okay, sir. Thank you. Thanks for the time, sir.
Yeah.
Thank you. The next question is from the line of Avinash Gupta from an individual investor. Please go ahead.
Hello.
Mr. Gupta, your line is in the talk mode. Please go ahead. As there's no response from the current participant, we'll move on to the next. That is from the line of Sid Gosar from Swan Investments. Please go ahead.
Hello, sir. So in your last call, you had guided that the order book was approximately of 1,000 crores, out of which 123 crores was of O&M, and you had guided to execute that order book in the next 12 to 18 months.
No. With regard to O&M, the balance order book, the execution time is about 7 years. Every month, the billing would be about 1.4 to 1.5 crores.
Yes, sir.
But the other orders also, they are not of 12 months. There are many others which are 24 months.
Yes, sir. Just requesting for some clarity on this point. As in the last call, you had mentioned that these orders would be executed in next 12 to 18 months.
Those are the defense order books,
yes,
which is an average. We have got some orders.
18 months is an average, but there are 12 to 24 months. Some may even go up to 36 months also, because where we are doing the propellant casting only, the rocket motors are issued as FIM by BDL or other agencies. You can't do anything unless they issue the FIM. So the order may, but it may go to 36 months, extended it like that.
Okay, sir. So one more question. The shafts order worth of 550 crores. So the execution will start in February, if I'm not wrong.
Deliveries, yes, it will start from.
Yes. So the delivery will start from February, and how much do you think you will be able to do in this year, in FY24, out of the 550?
It is very premature, sir. We are working hard to get the maximum, but it is very premature. Because it requires, it depends on so many external factors.
So a ballpark number maybe?
It is difficult to say.
Okay, sir. Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. P.V. Chaudhary for his closing comments.
Thank you. Thank you very much. Thank you, everybody, for having the trust and faith in your company and the management. And we hope to maintain the same figures and same level of performance in the coming years. Thank you very much.
Thank you, members of the management team. Ladies and gentlemen, on behalf of Premier Explosive Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.